US Federal Reserve has downgraded its forecast for the American recovery.
And it's committed to keeping interest rates below 0.25% for the next 2 years. It's left the market trying to figure out if it's good news or bad news. For more, our North America correspondent Craig McMurtry joins us now from Washington. Craig, good morning. So the Federal Reserve actually had some rather sober words about the slow nature of the recovery. Not what we expected to hear.
Well, it was in the sense that it was very hard to see how they could do anything other than give a pretty gloomy forecast, and that's what they've given here. The devil is always in the details of these statements. The market was really wondering, analysts were wondering, if the Fed would try and do something very brave and suggest some sort of new round of stimulus. That did not happen. In the gloomy forecast, in the statement, it's saying that economic growth so far this year has been considerably slower than the policy committee had expected. It talks about a deterioration in US labour market conditions, housing spending flattening out, and it says the housing sector remains depressed. Overall, it says the downside risks to the economic outlook for the US have increased. But this is the line that really caught everybody's attention. In the statement, it says the committee currently anticipates that economic conditions, including low rates of resource utilisation and a subdued outlook for inflation over the medium run, are likely to warrant exceptionally low levels for the federal funds rate at least through mid-2013. So that means short-term interest rates currently somewhere between 0 and 0.25%, virtually zero. The Fed is saying that the benchmark rate will stay in that range for the next 2 years, and that really caught a lot of analysts by surprise. It was seen as a commentary about growth prospects for the US economy for the next 2 years being very limited, very weak, and talking about the US Federal Reserve not having really any concerns, or too many concerns, about the risk of inflation. The statement goes on to say that the committee discussed the range of policy tools available, and it says it is prepared to employ these tools as appropriate. Now, there was a lot of speculation about what that meant, but the prevailing view seems to be that it doesn't suggest another round of quantitative easing. And the final point from the statement that's really interesting is that there were 3 dissents. 3 of the policy committee members were not happy about the Fed essentially pegging the interest rate so low all the way through to mid-2013. They preferred the language that the rates would stay low, the funds rate would stay low for an extended period, and so those dissents were acknowledged. Now, the market has been a wild ride today on the New York Stock Exchange, trading on the Dow Industrials in something like a 600-point range, as you've already said. Yesterday down 5%, today closing up around 4%, and there's real interest about where this goes from here. The view is that really analysts and the Fed are looking to Washington now to take some sort of legislative action.
So is there a possibility for another stimulus package?
Well, that's the speculation. Will Washington finally get its act together and do something? But it's hard to see how, because there has, of course, been this big battle about the debt ceiling and the need to cut. So the margins here, it's difficult to see how politicians will be able to come up with a way through. But the message that the market seems to be sending to Washington is that really the work needs to be done on the fiscal side now. It needs to be done in the area of cutting spending, of course, but also they're really looking for politicians in this town to come up with some sort of jobs plan to really create jobs. And the interesting thing at the end of the day was gold was touching new highs, the dollar was down, but toward the end the rally seemed to strengthen as money came back to high yielding stocks. Maybe investors feeling that that was as worthwhile as anything else, and gold finished off its highs for the day.
Craig McMurtry, thanks for that update. Thank you.
Okay.